Hi everyone. In this video I'm going to talk about a company called Etsy, which is like an online platform similar to eBay and Amazon, much smaller in terms of market capital, but I think it has a big potential to become a couple of hundred billion dollars worth of market cap company. You can see at the moment is kind of market cap is $24 billion, and you can see on the first page stock analysis. Again, for this video I'm using TipRank's platform. You can they provide you free access as well, for some of the features are limited, and I am just like on a trial run. Stock analysis, you can see smart score based on all this hedge activity analysis, rating and everything, averaging all this positive news and giving you a number 10 outperform. So the only negative thing is the hedge fund activity, but you can see the insider activity is even doubling that value, so nothing to worry too much. If we go down, this is the graph. For the graph, we'll just use a trading view just to see where you can see the technically is there's a momentum as well, it's positive as well. So next one is analysis. You can see it's 13% averaging all this analysis rating, so from maximum to minimum, and basically using the average. You can see maximum roughly around 37, 35, and the minimums are around even 2 or 10. So averaging all these values, and gives you only one analysis is recommending to sell it, thinking that it is overpriced, but rest of them are positive. So in terms of one thing maybe we can go through is in terms of is very profitable company. They increase their revenues and earnings massively every year, but at the moment they are not there's no dividend yet, but in a couple of years time I expect them to kind of provide dividend as well. Again, all this positive news, these are all my personal opinion. I'm very kind of positive about this company, but you do your own research and you make your own judgment basically. Second thing is, if you go to the chart, you can see this is the chart for the Etsy. Just go for the weekly view. You can see this is the pandemic, March 2020. You can see it dropped around $30. It was trailing around 60-ish, 70-ish, and it dropped around 30. And from 30, within just 1 year, just over a year, and it went all the way up to 252. This is the potential for this company. You can see 8 times, and from there's a bit of correction, but you can see it bounce back very nicely from exponential average, 50 days average, and now is at the moment is looking positive. If you go to day, like to just check it for a year, and you can see the graph is positive. You can see MACD is coming almost across, and ATR, average true rating, they also is also following the graph nicely. As you can see, it's going up, this level went up. You can see it's following the graph basically. ATR value at the moment is above the moving averages, so nothing to kind of worry. Personally, I am not so much interested in long-term. This is one of the long-term investment kind of company I would consider, so I'm not so much interested in graphs basically dropping 10%, 5% up and all that. So long-term investment, and I suggest to use like a averaging the cost basically. If it drops more, then you can buy a bit more, so always have a bit of money on the side. You can see this level worked very nice as well. You can see the support level in this area, so it didn't let's say cross that, and it didn't lose too much, so it find the support from there and then went up. So it might come back to around $150-$60 area and then bounce from there as well. But again, all these are expectation, let's say. If you look at the company itself, in terms of user friendly, is much more user friendly than eBay and Amazon, much easier. Personally, I'm using it as well to sell some of things on this platform. Much easier, much clean, and there's hardly any errors when you upload and when you customize things or when you sell. Their support group is very good, and they have plenty of kind of documentations if you run into issues. So you can see there, this is their interface, so it's very nice and easy to use, and that's one of the key thing that I kind of I'm very positive about this company. When I also dealt with eBay and Amazon. They have hundreds, thousands of kind of rules, and if you can get through them, then you are lucky, basically. So much more easy to use, and there are many people started using this platform. So if you look at the news, some of the news here, you can see this is the kind of using Yahoo Finance just to get up some of the news. You can also go to news here as well. You can find similar news here as well if you use this platform. You can see in 11 hours ago there was some news about this. It says its gains increasing. There was revenues, but might lag the market. So we can just check it here. You can see in this news section. One of the key things I'm checking with the company is the PE ratio, price to earnings ratio. Basically, at the moment is 60, expected to be 66 forward price to earning ratio. This is very high for a company. If you kind of usually is 10, 15, but depends on the industry as well. So I'm not usually put off by these numbers, and basically there's another ratio called PEG ratio, basic price earnings divided by growth of EPS, earnings per share. So basically some of the EPS values, price to earnings values might look so high, but if the company is doing very well, if they are increasing their revenue or earnings 20, 30, 50% a year, then PE ratio 50, 60 is nothing. I just want to quickly talk about PE ratio just to highlight kind of a couple of points on this one. Let's say, excuse my drawing by the way, here will be a bit tricky with the mouse. Let's say we have a PE ratio here. Let's use a different color here. Let's say this is 20 and earnings are 2, let's say. So we have a PE ratio of 10 here. Let's say the company has there was some positive news, and there was some positive news, and also there was some speculations maybe about the some agreement with another company, or company is going to buy some other small companies. Let's say the new PE ratio, in this case, let's say the price for that speculation, price went up all the way to 40. Yeah, and then earnings still stays same, isn't it, for that company for that specific year. So the price to earnings ratio becomes 20. That's why we say is expansive. So if PE ratio increases, we call that company expansive, because the graph is going up. Basically, let's say the price already increased from 20 to 40. So price already went up, and then we call that company expansive. In another scenario, let's say there was some negative news for the company, and let's say the price instead of 20, now new price is $10, and the earnings is still 2. So PE ratio becomes 5. So from 5 to 10, we say, okay, this company is very cheap now. Price to earnings ratio dropped, so we start buying it. So that's why the price to earnings ratio, usually rule of thumb is 10 is expected, depending on the industry. Again, PE ratio 50 for an industry might be better than PE ratio for another industry if it is 10. So 50 might be better than 10, depending on that. So you need to compare the PE ratios based on that industry. And here, since PE ratio for Etsy is around 50 to 60, we think it might be too much. Yeah, because it's already priced, and price went up, and is already very high. But the ratio called PEG ratio, PEG ratio, we'll just do this is PE divided by EPS growth. EPS growth in terms of percentage. So if it is 50, let's say PE ratio is 50 for Etsy or another company, and if earnings per shares increases dramatically, this shows the potential within that company. Let's say it was $4 and it went up to $6. Yeah. So what is the increase here? 50%. Yeah, increases here is 50%, isn't it? So if you divide PE by EPS, so if you divide 50 by 50, you will get PEG ratio of 1. So as again I say, the reason why I'm drawing all this, again excuse my bad drawing, but I don't want to waste too much time. A PE ratio might look very big. PE ratio might be 50, but if you have a massive earnings per share growth, if you divide your PE ratio by that EPS, that shows the potential, which will give you very low PEG ratio, so which might change your mind about that company. That's why I draw all this to draw your attention, just not to judge by PE ratio, but also use other ratios as well, which can kind of put an input based on company's potential growth. Again, yeah, I'm very bullish on this company, and this is for long-term investment. But you do your own research as well, and you make your own judgment. Thanks for watching, and we will see you in the next video.